Only 0.05% of entrepreneurs are able to raise funding for their startups. Fortunately, there's a better way to fund your startup or any other of your dreams. I will show you how you can turn $500 into $50,000 over the next 12 months using decentralized finance tools. Welcome to Startup Self-Funded. But first, let's do a quick recap of the MicroStrategy playbook and why it is so relevant to startup finance. Over the past 4 years, MicroStrategy has outperformed all of the top tech companies on the stock market. They did it with an easily replicable business model that revolves around managing a Bitcoin treasury. Can you even imagine how hard it would be to compete against any of these top tech giants? Regardless of how much you think your startup will revolutionize the world, chances are you're likely to fail the first time. But you can have a sustainable funding stream that lets you run as many experiments as you need to reach a product market fit by focusing on treasury management. MicroStrategy uses a buy and hold strategy on Bitcoin while leveraging loans and the sale of equity to investors. This model works because the cost of the loan gets cheaper and cheaper as money gets devalued over the years, while the price of Bitcoin keeps increasing significantly on average. The reality is that Bitcoin price is in theory infinite because government currency can be printed indefinitely. This means the price of Bitcoin may not even be increasing that much. It just maintains its value better in comparison to the devaluation of the dollar. A $1 million loan amounts to only a small fraction of that when you factor in inflation over the years. Once you accept to manage your startup finance partly with crypto instruments, the next step will be to manage the volatility to your advantage to maximize returns on your capital to offset the monthly burn rate of your startup. This is a significant revenue stream that doesn't require product development and is relevant regardless of what your business is. As well, there are ways to significantly increase your rate of returns as compared to a simple buy and hold strategy. Imagine you need $10,000 a month to run your startup in the first year while you attempt to reach a product market fit. There's a link to a spreadsheet in the description of this video where you can model how many months you'll need to reach your goal. Unfortunately, this means you need to put aside product development for a few months while you focus on treasury management. But once you have reached a minimum viable treasury, you will never have to worry about money ever again. Not only that, by integrating a better corporate treasury management process, it means your competitors will be scratching their heads trying to understand why you are able to outperform them so much. Once you have established what is your minimal burn rate to operate your business, then you can work out how much initial capital is needed to reach that goal based on a certain time frame. The shorter the time frame you are willing to wait, the larger the initial capital required. Don't worry, I will describe different methods to significantly accelerate your time to market, so stay tuned. If you have access to no capital at all, don't worry. The crypto market has introduced the concept of airdrops to give you free money. You'll just need to be a little more patient. We won't go into the details of airdrop management in this video, but feel free to comment below and request a dedicated video on the topic if that is of interest. Some airdrops can give you between $50 to several $1,000s. Airdrop are essentially crypto projects that give their initial customer base their token for free in exchange for their early involvement with their project. You can imagine an airdrop like a company that chose to give the customer acquisition cost to their customers directly, instead of giving it to marketing companies. In either case, if you have some initial capital, let's say $500, you can use various crypto exchanges such as Binance, Bybit, or OKX to double your capital using a margin account. Please use my referral link in the video description to receive additional bonuses on any of these exchanges. The way a margin account works is that you can buy, let's say, Bitcoin, then take a loan of twice the value of that Bitcoin collateral in USDT. USDT is a commonly used stablecoin that is traded one-to-one with US currency. Ideally, you shouldn't take the maximum loan amount possible because Bitcoin could decrease in price, leading you to get liquidated. So depending on the risk you're willing to take, it would be ideal not to exceed a $1,000 of USDT loan on a $500 Bitcoin collateral in case the price of Bitcoin crashed significantly. The interesting part here is that as Bitcoin prices increase, repaying the loan becomes trivial. All you have to worry about is the interest rate you have to pay and the volatility of Bitcoin itself. In a future video, I will describe when is the best time to take a loan using a margin account using 3 different charting indicators. The first called a RSI, short for Stochastic Relative Strength Index, the second being a Fear and Greed Index, and the third being the funding rate. Note that nothing in this video is financial advice. I'm just explaining my strategy to fund my own startups in case it may help others. Once you have obtained your loan, then you can start trading this capital. There are very few crypto assets that outperform Bitcoin, but Solana is one of them. As well, we shouldn't discount Ethereum either, given that it has an ETF product enabling pension plans to invest in Bitcoin and Ethereum as part of their asset under management. My primary method of growing my capital is with grid bots. When you trade using a grid bot, you are acting as a market maker, counteracting trades on exchanges, meaning you are buying Solana when other users are selling it, and selling when others are buying. Overall, this means you are generating profitable pairs of trade when the asset price is ranging up and down. For example, Bitcoin has been in a ranging market for the past 6 months, which are great conditions for using grid bots. The advantage of a grid bot is that you are generating return even if the price of the asset is going sideways. Based on my own capital investment over the last 2 years, I typically generate 10% per month in a sideways market, while this can spike to more than 50% per month into a strong upward trend, which the crypto market is well known for during a bull market season. Note that there is significantly more risk in this trading technique, but you are mostly trading passively as the bot is trading on your behalf, which leaves you time to manage your startup. Most importantly, you still have the initial capital of Bitcoin that could increase in price over the next 12 months. If you don't have access to these centralized exchange or grid bot tools, don't worry. Just comment in the description of this video, and I will make future videos that explain a similar process using yield farming on decentralized exchange. Assuming the market traded sideways for a while, you would then have additional capital to attempt unlocking additional funds using a prop firm. Prop firms essentially let traders attempt to pass a test, and if they are successful, then are receiving an allocation between $5,000 and $100,000 to trade on behalf of the firm. Note that more than 90% of traders lose money. However, proper risk management can make it possible to risk $50 on a test to get an allocation of $5,000. I will be going over proper strategy and risk management in a future video dedicated to passing the early stage test on a prop firm. Assuming all goes well, you can then start earning about 5% a month on that extra capital without risking your own money. You can then transfer the profits back into your primary account to grow your capital more safely. Once you get comfortable with trading on a prop platform, you can take more expensive tests in order to unlock larger amounts of capital. However, soon enough, your own capital should be large enough to fund your business. Additionally, once you have a few months of metrics to show for, you'll be in a good position to convince friends and family and possibly angel investors that you are worthy of growing their capital. In my case, I use a staking platform to collect funds from participants where they lock their Bitcoin, Ethereum, or Solana and sacrifice the potential yield of those assets in my favor. In exchange for supporting the launch of my startup, I give them early access to the product I'm building for free, almost like a crowdfunding campaign. This way, assuming all goes well, your backers can get back their initial capital after the staking period completes. Unlike traditional crowdfunding platforms, the backers actually have a chance to get back their initial capital. This is a great way to grow your community of customers and backers, and in parallel using a lean startup approach to investigate potential problems worth solving for that community. Based on the simulated returns in my spreadsheet, I believe that turning $500 into $50,000 in about a year is possible, and I will demonstrate it with my own money. Overall, this process is vastly more probable to succeed than suddenly securing VC money or succeeding at reaching a product-market fit in your first attempt. Not only that, but once your startup is operational and generating profits, you can continue managing the treasury to ensure financial survivability, since it is a significant potential revenue stream that may even overshadow your core business product for many years. Think about it. Charitable organizations usually operate in this manner. They invest capital received from donors, and then operate on the profit generated such that they can financially survive without revenue for many decades. This comes back to the MicroStrategy Treasury Management business model, which has been demonstrated to outperform even the most innovative and strongest companies in the world. If that's not enough to convince you, consider that Tether, the company that created USDT, generated $5 billion of profits last quarter with only about 100 employees. This is more than 2 times the profits of Netflix last quarter, which has 13,000 employees. If you enjoyed this video, please like and subscribe so that you can tune in my next videos where I will go into a lot more details of setting up grid bots, margin account on exchanges, compete effectively on prop firm challenges, and finally unlock capital for your startup using a staking platform as an alternative to crowdfunding. As well, if you have any questions, feel free to drop a comment or join my free private Telegram group.